Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. A tax bill likely similarly resembling what we've recently seen will soon pass. This tax credit is substantial. With $10,000, they're not messing around. This leaves a dilemma for Tesla, as they've already set their prices, and are thus unable to take full benefit from the tax credits. All it will do is increase the already growing waiting list for a Tesla. In addition to that, it will likely mean that Tesla alter their business strategy to concentrate more on the US and somewhat neglect Europe and China as a result. Either way, the government will pass something that will dramatically increase Tesla's demand. And yes, when Texas is online, it will ease some of that demand, but there will still be far more than Tesla can handle, especially for the Cybertruck. Texas could possibly get to a run rate of 1 million Model Ys sometime next year, for all we know. But when Model Ys cost $10,000 less, then that still might not be enough. Tesla were planning on delivering this much supply anyway, before any potential tax incentives coming their way. Except for Ford's recent EVs, none of the others have set a price point just yet. All manufacturers launching a new EV will simply be able to now increase their price, enabling them to perhaps squeeze a profit, whilst also able to compete at a price point with ICE cars, due to such large tax credits. This is such a dilemma for ICE manufacturers. They can't really price themselves somewhat competitive with Tesla now, or else they would compete too much with their ICE models, and of course not be able to cater to the demand. With the current plan on the bill, Ford's electric F-150 Lightning would undercut the cheapest ICE F-150. But Ford will simply not be able to keep up with demand, and are most likely losing money on most sales. If they raised their prices by $10,000, then they could possibly even be making a slight profit. But that would look bad for Ford, as the public will clearly see that Ford are simply trying to take something that was for the consumers as profit for themselves. And if Tesla now increased their prices in anticipation of the credits, it would not reflect well on the brand if Tesla simply raised their prices and took the tax credits away from the consumer. They're aimed for the consumer, not the car manufacturer. So to blatantly raise your prices so the manufacturer essentially receives all the income is not the best look. But Tesla are going to suffer a serious supply issue, and to reduce demand, you raise prices. So demand reduces closer to where supply is. When you have a price where demand meets supply, it's known as the market clearing price. Even now, without any tax credits, judging by the growing waiting lists, it would appear Teslas are already priced too low, and Tesla have been slowly increasing their prices to match the demand. But there'll be a gigantic jump in demand when all Teslas are $10,000 off. We could see waiting lists in excess of a year. In other words, Tesla's price is not close to the market clearing price. So how did Tesla get around this? If they increased their prices by $5,000, then that would give them around 50% more profit margin for each car they sold. It would also mean that if the tax credit was $10,000, then they still pass on half of the credit to the consumer. E.g., a standard Model 3 becomes $45,000, up from $40,000, and the tax credit reduces it to $35,000. With Fremont and Texas, if Tesla is selling 1 million cars a year, for example, just from those factories, then that's an additional $5 billion a year in EBITDA. It's pure profit, and investors are worried about Tesla losing their regulatory credits, but it likely won't take too long until those factories are doing upwards of 2 million vehicles a year, which of course is $10 billion extra profit. Now this won't last forever, but it won't go away anytime that soon. If the proposal remains at 50% market share being EVs, and then slowly decreases after that, there's a good chance that these discounts might remain for 5 to 7 years. In other words, Tesla really need to raise their prices, and do so in a way it doesn't reflect negatively on the brand. And I think they just found a way. They can raise their prices now in anticipation of the EV credit before it has actually passed, as to not look too coincidental. They have thought of a relevant reason which is on trend with the business climate. Tesla are blaming it on the supply chain issues, and Tesla is far more vertically integrated than them. And Tesla has a much larger buffer of profit margin, allowing them to deal with price fluctuations that much better. So I have a theory that Tesla, using supply chain issues on increasing prices, is just a tactic to increase prices for the EV credit. If not, they're simply leaving so much profit on the table. They may as well take it. All the other EV competition will be increasing their prices where they can, and this is always how any government subsidies work. For example, in New Zealand, the government give first home buyers $20,000 contribution to their house if it's under $400,000. The end result is that all houses under $400,000 simply increase in price by $20,000. Government plans rarely ever work out the way they're intended, which is why I'm a firm believer of separation of business and state. But if this tax credit lasts for 5 years, then it won't take 2 to 3 years until Tesla is close to perhaps 4 million units a year in the US. And if this resulted in them launching the Model 2 in the US instead of China, then it could be significantly higher. Imagine a Model 2 factory with a capacity of 5 million cars a year. This tax credit is a fixed price. It's irrelevant whether the car is 70,000 or 20,000. The amount subsidised will be the same. The cheaper the car, the higher fraction of it will be discounted. For example, if Tesla launched a $30,000 version of the Model 2, then with a $10,000 credit, you would receive 1/3 off the cost of the car. If Tesla are charging $5,000 more than they would have, then they still receive the extra $5,000 per vehicle. I think there is no way around this. Tesla want to absorb as much profit as they can. Look how they took advantage of all the regulatory credits, except this will be on a much larger scale, perhaps even by an order of magnitude. If by this stage Tesla have their 4680 lines sorted, then this extra income can be used to grow more and more factories. Once Tesla have perfected their lines to a good enough level, then it's simply rinse and repeat. Their only issue being they need enough engineers to get them going. Right now, Tesla has a shortage of engineers. This will be a high-growth industry and a great vocation for people to study at university or wherever. However, it takes time to educate, but perhaps we'll see a lot more engineers around in a few years' time due to all this extra demand, which won't be declining anytime soon. We're rebuilding the energy infrastructure of the world here, and the best part is it's being done through a business, and that business will also do it in a way that is highly profitable. What the 4680 battery has done for the world is priceless. Simply getting the price per kilowatt hour down to compete with ICE cars and give significant returns on energy storage. This is a big deal. But with ICE manufacturers likely going under in the next few years, perhaps it will possibly mean a lot of their employees will move over to Tesla, perhaps after some retraining. Legacy auto companies hire an enormous number of staff. Once they're finished, then hopefully there is a flood of relevant talent that Tesla can use to grow their battery factories the fastest. I'm sure Tesla can eventually sort out their supply chain, even for nickel, along with their 4680 production line process. But they can't make a machine that makes engineers. Anyway, this tax credit will come in at a similar shape and size, and Tesla will do what they can to raise their prices as subtly as possible. But get ready for the FUD we're likely to hear over the next 5 or so years. Tesla only makes profits from tax credits. Thanks for listening. Please hit the thumbs up. Don't forget to subscribe.